Are you confused about how much to pay the IRS in estimated taxes and how much to save for taxes throughout the year? I mean, what do I, as a small business owner, even pay taxes on? You're listening to Business by the Books, the podcast that teaches you how to use your financials to manage your business. My name is Danielle Hayden. I'm the founder of Kickstart Accounting, where we use bookkeeping as a vehicle to help business owners take control of their numbers. And I've helped thousands of entrepreneurs make informed financial decisions for over a decade. Today, we're going to dive into exactly how does a small business owner know how much to save and pay in taxes throughout the year. So in this episode, you can look forward to 3 things: how to pay estimated taxes, why you need to save more than your estimated taxes, and how to determine how much to save throughout the year. So if you are as confused by taxes as so many entrepreneurs are about what to pay and what to save, then I want you to stay tuned. I've got you covered. All right, so first of all, how do we know how much to pay in estimated taxes throughout the year? Now, estimated taxes are based on your net income from the previous year. So this is really important that you're coordinating with your CPA who filed your tax return for your previous year to ensure that you are paying what's on your coupon. Like, picture an old style coupon code. You are paying an estimated taxes this year based on your net income from last year. And your CPA provides that amount for you to pay each quarter in estimated taxes. Now, this is why it's so important to have a money team and a CPA who is going to equip you with the information that you need to know. That's why we created KSA Tax Partners, because we know the frustrations and the burdens that entrepreneurs have had to endure by working with people in this industry. So every single one of our clients walk away from their tax return knowing exactly how much they have to pay in estimated tax payments throughout the year. But this year, your business has a different performance than last year. Maybe this year is going so much better for you. And I love to hear that from our clients. When this year, we're starting to have that hockey stick growth because of all the money and time that you've invested into your business, you are having that growth in your business, which is absolutely amazing. However, as you have growth in your business, you need to stay prepared for your taxes. So that means you're going to have to save above and beyond your estimated tax payments. When we send our clients their financial snapshot at the end of each month, we always include that number. We call it the tax reserve. And that number is based on your net income. It's about 25% of your net income. Now, I want you to take that tax reserve and minus the amount that you have already paid in estimated tax payments. And that is the amount of money that you need to have saved for next year's taxes. Now, it's really important that you put this money in a separate checking account. If you're anything like me, if the money's sitting in my checking account, it's like permission to play, right? If it's still sitting in my checking account, it's fair game until it's moved into another bucket and has been allocated. So I think it's really important for you to have several accounts in your business: an operating account, a tax payment account, and then a rainy day fund. And so those are the 3 accounts that we suggest every single client have in their business. And so take that money that's part of your tax reserve and move that money over to your tax savings account. Now, I want to clarify exactly how much that you need to be saving as a business owner, because I think that this is where it gets really confusing. Some business owners will ask, am I paying money on the draws that I take as an LLC? Do I pay taxes on my net income? Do I pay taxes on my salary? What exactly do I pay taxes on? So I want to break this down for you. As an LLC, when you take out owner's draws from your business, you are going up to what I refer to as the cash ATM of your business. You can take out as much money as you want. Like, literally, you can take out as much money as you absolutely can. Now, I don't suggest that you do that. You need to have cash in your business to continue to fund your operations, to be able to invest in growth, and to continue as a healthy, sustainable business owner. However, you can go up to the cash ATM of your business and take those funds out. You do not pay taxes on your owner's draws. So I want to repeat that. You do not pay taxes on your owner's draws. You will pay taxes on your net income of your business. The net income can be found by going to your profit and loss statement and going all the way to the bottom of that report. It's revenue minus cost of goods sold minus operating expenses. And all the way down at the bottom of that report, you will find your net income. The year-to-date net income is what you will pay taxes on. And again, we like to do a reserve of about 25% of that net income amount. That's how much you can save in a separate savings account so that you're prepared for tax season. Now, for my S Corp business owners, this is a little bit different for you. You are also paying taxes on your salary. As an S Corp, you are now paying yourself through payroll. You have become a business expense to your business.
We'll get back to the show in 1 second, but real quick, are you a business owner feeling overwhelmed by your finances? Do you find yourself wishing you had more control and understanding over your money? Managing your business finances can often feel like navigating a ship through a storm without a compass. But what if instead you could master your business finances in just 5 days? With the confidence to manage your money, make informed decisions for financial stability, and implement strategies to increase your profitability effortlessly. And that's exactly why the 5-day video bootcamp was created. It's a comprehensive course designed to empower you with the foundations for financial success. Throughout the bootcamp, you'll learn the foundations, how to manage costs for profitability, evaluate investments for growth, and avoid common financial pitfalls. So if you're ready to take charge of your financial journey and rewrite your success story, head over to esuite.co/5-day bootcamp or click the link in the show notes and sign up for the bootcamp today. Okay, back to the show.
Now, business owners, if you are not an S Corp, do not put yourself on payroll. This is only once you have filed for the S Corp election. You are now put on payroll to pay yourself a reasonable salary. You have to pay yourself a reasonable compensation before you can take out any owner's draws. And you will be paying payroll taxes on that salary amount. Now, as an S Corp business owner, you're also going to be paying taxes on the net income of your business. Now, the good news here is you are not paying double taxes. You are now an employee of your business. So you are considered a business expense to your business. You are lowering the amount of net income that your business is going to report at the end of the year. Therefore, you're lowering the amount of net income that you are going to pay taxes on. Now, you can take draws as an S Corp as well. However, we recommend you not taking anything in draws or commingling business and personal expenses until you've paid a reasonable compensation. The IRS is cracking down on this over the last few years. They want to see business owners paying themselves through payroll before taking draws. And really, guys, this is just to ensure that we're not avoiding payroll taxes. They're not after you, right? There are people out there who are taking advantage of the system. And so let's play by the rules. And that way, if we're ever audited, we can verify to the IRS to say, this is how much I've been paying myself, and this is why. Again, at KSA Tax Partners, we give every single one of our S Corp clients a reasonable compensation as part of our mid-year check-in that we do. We make sure every single one of our S Corp clients has a reasonable compensation calculation so that they have this trusty piece of paper that can go up against an IRS audit. And once you've paid yourself that amount, you can really take as much money in draws as your basis can support. I'm not going to go down the basis rabbit hole. There you can talk to your CPA and talk to them further about exactly what you should be taking in reasonable compensation and draws to make sure that you are staying within those guidelines. So again, as an LLC, you are only paying taxes on your net income. As an S Corp, you are paying payroll taxes on your salary, which is going to lower your net income. And then you are paying taxes on the net income. You are not paying taxes on your draws. So I hope that this helps you as a business owner know exactly how we're coming up with the reserve amounts, how we are approaching estimated taxes, and why it's so important for you to be saving throughout the year. My mom's always said growing up that there's two things that are guaranteed in life, right? We are going to pay taxes and die. Every single one of us here. And so it's not a surprise, right? We cannot be surprised as business owners that we have to pay taxes in April. I want you to put a stop right here, right now. You are a business owner, and it is time for you to take responsibility for your business. The day that you became an LLC, you said, I want to be a business owner, and you accepted that responsibility. Every time that you do business with one of your clients or one of your vendors, you are re-accepting responsibility as a business owner. So do not put your head in the sand and say, I'm not a numbers person. Oh, my bookkeeping, my money team, they've got it. We are a done with you service. And even if you don't work with the Kickstart team, your bookkeepers, your tax accountants, your financial advisors, they are done with you services. Even if the bookkeeping is done, it is your job as the business owner to review the numbers and decide what action to take. Even if you're working with a CPA, it is your job as the business owner to review your tax return to make sure that you understand it at a high level. You are responsible for paying your estimated taxes, and you are responsible for saving throughout the year. No matter who you work with, it is your responsibility to make sure that you are taking care of your business throughout the year. All right, sorry, I had a bunch of tough love for you today. I hope you enjoyed today's episode. We will be back every single week helping you as a business owner know exactly what to do with your numbers so that you can manage your business to create a healthy, sustainable, profitable business. We are here to support you. We are here to be your resource.
I have a favor to ask. If you have gotten any value from this show and you want the show to continue to grow and keep providing you with strategies for financial growth and efficiency, simply leave us a rating and review if you're listening on Apple or Spotify. Those reviews really go a long way in attracting more listeners, and honestly, they really make my day. So if you're feeling up to it, we'd love to see a rating and review from you. Either way, thanks so much for listening to the show.